Good evening, ladies and gentlemen. It is Tuesday, the 2nd of November, 2021. Welcome to Hindsight, episode 25, where we learn to be a better trader. We're going to take a look at the trades that I've taken today and yesterday, seeing what could be done better, improve on those things, and this is basically my video journal for what I've done for the last couple of days. We've got ANP. This one opened in the middle of the day on the 1st of November, bang on at midday pretty much, and it was a short from match all the way down to 26, and if I took the time to read the announcement properly, I probably should have held on a little bit longer. It was basing a little bit here, so I was happy to take this pretty big move, pretty significant move. At this point, I think that was about 18%. If we take a quick look at the announcement, we can see it did a cap raise at 24 cents. I didn't really see how much, I wasn't interested. It's just a good sounding biomedical news with trials and stuff, and then just seeing the placement, right? This is what matters. How much of a discount? So 18.6% discount. So a huge tank in the share price. And this was middle of the day, so it didn't even gap down that much. So this is really good to catch in the middle of the day. Someone just called it out in Discord, and I thought, you know what, I'll just have a quick look. Turned out to be a really good trading opportunity. BIT, I don't even know what the announcement was. Again, this came from Discord. Someone called it out. It wasn't even on my watch list. And I guess it opened up at 11:30 because judging by the volume, it sort of pumped. And then I caught it somewhere around 5.6. I was paying attention to it. But like with all pumps, you know, if I'm late to the party, if I didn't catch the initial move to the upside, then I wait for the very first pullback, which is this. And then just start buying again. And then just scaling in. Tried to get a mid-sized position here, and then each position is roughly smaller than the previous one. I don't remember exactly the position sizing here, but I just remember that it was scaling in smaller and smaller and hitting out, just getting whatever I can, because I didn't know the news. I didn't understand what was really happening, except purely from a chart perspective. So took what I could get, scaled out here at 5.9 and some out at 5.7. So really simple trade. And then moving on to BSX, this one was a butchering, butchering by one tick, I guess. So I don't know what this trade even was, if I'm honest. Okay, it was a gap down of some sort. Not even interested in seeing the news. This was just a one tick stop. From memory, I don't think I even recall seeing the news on this one. I just remember seeing the gap down and just joining the momentum. And there was a pretty good wall there, so I ended up taking, what was it, 59.5 to 60, and that's all she wrote, really. One tick loss. Here we had upgraded earnings for CHC yesterday. Sounded good to me, but I got madly chopped on this one. This one was like one of those stocks where it's got like maybe 100 shares per line, and it's just full of bots and reloads and just disgusting algorithm action. Tried to catch the momentum to the upside, ended up adding on. As you can see, it started swinging back to the upside. Thought, you know what, okay, it's done its little pullback, it's going to swing back up, because the guidance actually sounded good, whatever earnings it was. And you can see the end result. It turns out I was correct in my bias. It's just how I got there didn't end up panning out. And it's just one of those things where the charts just didn't work out, right? So long, covered, and then new position short, break of range short, again failed, cover. So that's the thinking there, you know, breaker range. This is the first time breaker range has really actually just not worked. I'm just trying to think of a time in recent history where breaker range hasn't worked and it's faked me out. And this is the first time in a very long time that's happened. So I'm not even that upset. It's a little bit annoying, frustrating seeing the price action as it was on that day, but it is what it is. You know, you just get these some of the time, and there's just nothing you can do about it. You know, you chart away. It looks nice, and then you look at the book and you're like, fuck, I probably made a mistake even touching this thing. So it's one of those situations where I've never even heard of CHC, but news was good, took a chance, and as you can see, it actually ended up doing quite nicely. So my initial understanding of the earnings was correct in the bullish bias, but it is what it is. DLM, this one came out of a trading halt from a 14th of July was the last time it traded. So this is a year and a half almost. And, you know, I didn't really pay attention to this one. I thought, okay, how good is this really going to be? Because one of my rules is don't touch a stock that's been in trading halt for longer than 2 weeks, pretty much. And, you know, once I saw the price action, I was like, okay, look for a pullback. It's like, here's the first pullback. There's no pullback there, right? That's 4 or 5 ticks, and it was very short-lived. And then another pullback here. Again, it was short-lived, you know, 7.9 to 7.3. Maybe it just touched it at 7.3. So that was my signal to just get the fuck on the stock and buy. Oh, another pullback, buy. It felt a bit flimsy here, the selling that occurred at this level here, so I scaled out a little bit and then started scaling out as it was going sideways. I don't know, I was concerned it was going to do one of these kind of flops, and let me check VWAP. Yeah, okay. Probably a poor decision based on VWAP to even start closing out the position. It did feel weak here, and mostly just due to the volumes that tapered off, so there was a high volume sell, scale. Re-add into the position on strength. You can see the candle came in here. So after a bit of a lull above VWAP, volumes came in, joined the party right afterwards, scale, hit out a little bit. And from here, as you guys know, 9.9 is my target. It just is. So, you know, it failed to get there. You know, see some weakness here, 9.5, dip back to 9, which is a bit of a sharp drop. Tried again, 9.7, couldn't get there, hit out at 9.4 and 9, I think it was 9.3 or possibly 9.2. So identifying the weakness here, giving it every opportunity, and, you know, nice to see the volumes kind of confirming what's happening. I believe there was also a rug pull here as well. This was, yeah, I'm almost certain there was a rug pull here. So VWAP held, honestly, I'm not too sure what the thinking here was, especially after a rug pull, but I made up my mind very soon after to close out that position. There was no way this was going back up. Rug pull again, decided to get long on this because VWAP held, and I believe this was the reason. This is the only thing I can think of, and this only happened yesterday, but I'm trying to think of why I entered, because I know this doesn't make sense. And then I said, okay, it's like, oh, right, massive volume hold at VWAP. That makes perfect sense. Of course, I jump in on this every day of the week. High volume VWAP hold. I believe that was also a buyer, not a seller. So it wasn't someone selling into 8.3, someone bought into the offer. That would also make sense as to the entries here, because I just grabbed the prints and started marking the charts. So makes perfect sense, and that's it. You know, once spoofs are identified, there's no trade left here. There's no, like, you know, break here or anything like that. It's just, it's done. It creates lower highs, and it just keeps doing it. So no, this isn't like a pump consolidate, because it's basically in a down channel, and, you know, it's already had its rug pull moment. So like I always say, guys, whenever I see a rug pull happen, you know, there's a move to the upside, a rug pull happens at the highs of a big move to the upside, that's the top of the day. Like, for me, I'm done. That's it. It's going to take something magical for me to get back on this stock. In this case, it was VWAP held with a strong buy volume. And of course, even that was short-lived, because I do recall thinking that I should be getting in and out real quick on this, purely based on the rug pull action. And for some reason, it managed to actually rally today a little bit, but nothing too significant. It was brought to my attention, didn't really like the price action, especially around, where was it? Somewhere around here. It was brought to my attention. It was kind of breaking levels. Didn't like it. FNT was a botched trade. This one had, if I recall correctly, high shares on issue, I think around 1 billion. So as always with high shares on issue, irrespective of the news, I let it sell off a tick. In this case, I did. It looked like it was leveling out at 2.5, got some at 2.5, and it just went straight through 2.5 down to 2.3, and that was it. It's like, that's a big 2-tick hit. In terms of percentages, you know, getting hit 2 ticks on a 2-cent stock is a pretty big deal. But I don't go on these kind of things with big size or anything like that. So while the trade sucked, it wasn't anything too significant. And of course, it was on the back of, you know, rare earths and high purity alumina. I don't know about alumina that much, but rare earths are pretty hot lately, because if we go to REMX, We can see the ETF for rare earths are just absolutely stonking to the upside. So rare earths are hot lately. We've got LIT, which is the lithium ETF, which you see is just breaking out to the upside. So anything rare earths and lithium tends to be worth trading, but on FNT, unfortunately, not that interesting. GL1, this one was a follow-on from yesterday. This one was stonking about. I missed my opportunity at these levels here. It was brought to my attention that it was coming to this level. Decided not to take it because, well, the liquidity was garbage. I thought, you know what, it was more likely to be a double top and come off. And it was like midday, so like a midday lunchtime. It doesn't take my interest touching these kinds of stocks. And of course shoots up. And then, well, when do I take it? Of course, I take it today, which is the next day, the following day where it gaps up. I'm not overly upset about this one because on open, there was a pretty significant wall at 70.5. So one tick for the stop loss there. And when I say stop loss, it's where I'm stopping out. It's my mental stop loss, not an actual physical hard stop. So there was a 250K wall or something, just off the top of my head, something like that, 200K, 180K or something like that. It gave an opportunity of about 5 whole fucking seconds to exit. So of course I got my ticket open, ticket ready, and hit out within that first second, basically the moment that big wall starts getting eaten into. And then you can see the impact, of course, crushing a wall. That was significant. It just sells off, and I kind of ignored it for the rest of the day. I thought, right, open, fail, that's it. I also, someone mentioned that it was coming back into range. When I say I didn't touch it, I mean, it wasn't worth mentioning. I got a very small parcel as this broke and then scaled out like for a couple of ticks. It wasn't anything even worth mentioning because I got my sizing wrong. I probably should have added an extra 0. ICR, this one was interesting because it's a little specky, 5 mil market cap with 48 million shares on issue. Now this is just peculiar, right? There's nothing normal about this. 48 million shares on issue, there should be an extra 0 there at a minimum, right? 480 million shares, that sounds right for a 5 mil market cap, dog stock. And what we have here is ICR. Missed the announcement, so it opened up, even the opening action, we can see it opened up here at 10.5, didn't. And that's an awkward place to open up, right? 10.5, you're right next to 10, there's probably an awkward 10-cent thin wall. And then, if you buy 10.5, then you take basically what's the equivalent of 5 ticks in one hit when it drops to 10, and then it goes to 9.9, 9.8, and so on. So I didn't catch it, but I don't think I still would have taken it because 9.5 to 10.5 on the back of 170K contract value. 170K is nothing. I mean, we've seen. I think AR9 is a good example of a company that pulls in millions and millions and millions of revenue and contracts, but they don't really go anywhere either, albeit with a larger market cap. But what we have here is a very small contract with very small market cap and very small shares on issue. So it was these two things here that got my interest. So the stock was coming up. I found out about the stock. I saw the market cap. I was like, yeah, okay, it's okay. It's actually kind of tiny. That's interesting. And then I saw the shares on issue. And I was like, okay, I got to get in on this. Because how often do we see this? Very rarely. These two things alone get me interested in a stock. As long as there's liquidity on the bid and the ask, of course. Because 48 million shares is super thin, super low. So as always, I don't like catching the momentum to the upside because you don't know, if you buy in here, for example, and then it starts coming off, at what point do you stop, right? What point do you stop out? So I waited for whatever pullback came. I was lucky enough to grab 13.5, 14, scaled in 14.5, 15, and hit out at 16. So it was a really, really good trade. Really happy with that one. Not much else to say about it, really. You can see how it ended up, like every other micro cap, just dead. PDN, this one was actually quite interesting because if we look at the uranium ETF on this particular day here where it was coming off, it did a nice sell down of about 2%. And it didn't really gap down from the previous day. So I shorted it on match, took it to 84. I was pretty stoked about, bottom ticking. This is basically like my PLS. I really loved trading PLS, when the lithium ETF was up like 2.5%, just match long on PLS. It was a no-brainer. So this felt really good because, there's quite a bit of liquidity on the match and on the book. Not as much as PLS, of course, but, it's thick enough that you can put on okay size and make okay money with very little effort. And 84, I think there was a wall at 83.5 or something. I just queued up in front of that, and that was more or less a bit of luck. The opening drive for a few minutes is perfectly fine. There seems to always be enough on the downswing to last about 5 minutes at least. So that was sort of the trade there. And then later on in the day, because of course the ETF was down, for whatever reason, this ended up going to the upside. I mean, PDN does this a lot. It swings to the upside and then it comes off. Goes to the upside, comes off. It's just what PDN does. It likes to go up and then it gets smacked down pretty hard. So ended up taking an extra couple of ticks here at 87.5 and 87, and then closing it out into what I thought wouldn't actually work. I thought it might have to close out at auction, but ended up coming off in the final sort of 15-20 minutes and closing out for just a couple of ticks extra. So it's always nice to get on PDN. And surprisingly enough, the uranium ETF is nice and green by about 3% today. So it's on its upswing, so you can see it's kind of trending and going back up what looks like an upswing. And yet on PDN, we see a very, very red day. That's from 87.5 to 82.5. That's almost a 10% drop in the day on a strong ETF. So if we just zoom out and take a look at PDN, you can see that the stock is basically cooked as well. So, it's done this breakout, which every uranium stock did on this day. It broke out, topped out, and you guys can see my video on PDN and how I think it's heavily overvalued. But I thought surely this would be a sideways day at least. But the fact that this has come off and, uranium's done its cute little bounce here on the 12th of October. And then same thing happened here, right? The following day, because that uranium ETF is in the US. Of course, you get this move here. So it bounces to the upside. And then you can see it's struggling to hold its value. To me, it feels like just a stupidly overpriced Explorer, basically. Junior Explorer is what I think of PDN. So it's going to be interesting to see if this 80-cent level holds around here. And it almost feels inevitable that it comes down to the 60 level. But we'll see what the uranium ETF does, because obviously this looks bullish. Now, those of you who don't know, my opinions on uranium is meh, whatever. Like, I'm not pro, I'm not against it. I don't care about uranium. I have no real opinions on it. But I do have an opinion on PDN being overvalued, and I do have an opinion on other uranium stocks being overvalued on ASX. Now, don't take that as financial advice or a recommendation to buy or sell. That's merely just my opinion of the stock. And then, of course, we have the Sprott uranium as well, which was a little bit green, but still looking very much to the downside for Sprott. Next, we have REM, which was an IPO. Now, before I talk about how terrible my decision making here is, I just want to point out what happened on JDO and STP. Both of these stocks IPO'd yesterday, and you can see a very familiar trend of bottoming out. And I don't have VWAP on these. For some reason, VWAP doesn't work on IPO day because it opens in the middle of the day. But we can see it sort of bottoms out and it retests its highs and then kind of just chills. That's kind of the theme. So that's STP. We've got JDO doing the exact same thing. It sort of bottoms out after initial selling and then kind of goes on to make new highs and then kind of just chills out a little bit, whatever. So REM, that was kind of my thought process here, as if it doesn't hold. And honestly, I should know better than trying to hold an IPO, above the opening 2 minutes or so. Buying this level at 50, in hindsight, probably shouldn't have done it. but ended up adding on because it's like, well, JDO and STP, and it's just what those stocks are doing at the moment. It's almost like a trend. So of course, I buy into that with that expectation that it bottoms out. Of course, I didn't buy the bottom, unfortunately, but close enough that I was happy that it was leveling off and swinging back to the upside. Now, after this load of volume, which was like what felt like confirmation that it was swinging back to the upside, it didn't eventuate, so it felt weak, and I ended up scaling out. Now, I don't remember if it was this candle specifically, but I do recall that it was 50 cents and 50.5 was where I ended up getting out in sort of this area here. And opened up a new position as well as it was sort of leveling off, started building small positions. And I did end up actually getting another position here at 50 and 50.5, a much larger one. I forgot to tag it, but the trade ended up being 53.5 by accident. I closed out around half, and by accident because I seem to have this habit lately of having an order ticket ready. And it's double confirmation, right? So you hit sell, and then you have to hit OK, like confirmation. So I have that confirmation screen ready to go to sell out. And when I'm typing, of course, I hit the enter key. And for some reason, I end up hitting out with the enter key. So I got to learn to stop typing while I'm in a trade. So 53.5 was a mistake. I wanted to get as close as possible to this horizontal level. I had no expectation that this was going to go to the upside. It just didn't feel right, mostly because this was spoofed. This sort of level was heavily spoofed throughout the day. That's the difference between JDO and STP. I don't recall these stocks having spoofs, whereas REM did. So I had a little bit of hesitation there to go any further than sort of these levels. And of course, ended up going sideways, but which is quite nice. So we'll see what happens tomorrow. Should have taken a bit of a parcel. I was waiting at these levels here and just missed out getting a long entry because I'm thinking an overnight hold would be actually kind of nice. And we have WHC. Now, to give you guys a bit of context about this one, on the 1 minute chart, I didn't actually mark it, but I'll show you guys anyway. Before I get into that, this is sort of the background behind the trade for coal. And for me, it was WHC, Whitehaven Coal. So the Newcastle coal futures are down 30%, over 30%, 36% overnight, which is just fucking monstrous of a sell down. You guys can see how big that gap is. It doesn't seem like any other coal futures are impacted. The India coal, the Chinese coal, it's just the Newcastle coal. And I don't really know why. I think it might be the COP24 or whatever it is, the climate change summit or something. But I figured WHC would be impacted. So I ended up shorting the match at I guess it's 257, and ended up closing it at 257 because, well, 0 ticks of risk. And if I wouldn't have closed out at 257, it would have been 258. Yeah, I didn't want to go because this looked like a small gap. This was a very small gap given the sell-off in the coal futures. And I just left it alone, and you guys can see the sort of how big of a move it made eventually. So I actually wasn't expecting that at all. I was expecting a much, much, much bigger move early on. A bit of just a pile drive down, bit of a bounce, consolidate like this, and then just another move down. Something like that. That tends to be the trend for these kind of high sell-offs on commodities. That's what stocks tend to do when they have, commodity-based moves. But in this case, bitched it completely. So, failed. The idea was there. The execution, I think, was there. It's just the lack of re-entry. I think, the opening range here, for all I know, I probably would have got spooked, shorted here and closed out here or something. Here's an example of an opening range that just didn't work by one tick, I guess. But it's all well and good in hindsight. I'm not sure what the lesson here is, because 36% on a commodity overnight is massive, and to see such a reaction, I'm not sure what the lesson really here, what the lesson really is here. So it's just kind of a learning experience that maybe Whitehaven Coal specifically is a bit slow to act IGO is obviously way better, but even here you can see, the opening actions 976 drops a little bit, recovers, retests the closing price, and then it tanks. So maybe it would have been worth watching this kind of level here, the opening range, and of course the closing price. But that's hard to do in real time, because this is what it really would have looked like in real time, is something like this. Right, that would have been the opening range, and hell, it might have even looked a bit like that. So in real time, it's hard to really judge. And this is 30 minutes, right? This is a 30-minute sideways trade, and then into a massive collapse. So while it's nice to video journal this, I don't know honestly what the lesson is. I really don't know what the lesson is here. Except maybe that, liquidity perhaps might have been lower because it's Melbourne Cup Day. There's a Victorian holiday, and it's all well and good in theorizing these kind of things, but really it's, I think, not being impatient. It's fascinating to think that a stock can go sideways for half an hour and then end up tanking so hard afterwards. That doesn't even cross my mind as a possibility. Of course, we see these things on things like Flight Center, Qantas, and Webjet and stuff like that, where you can have these sort of sideways moves for a little bit and then a rally or a dump or something like that. But I mean, this is on the back of a 36% drop. I mean, I keep coming back to that, right? 36% drop in an overnight commodity. Now, how much is WHC, so Whitehaven Coal, and IGO Limited? How much are these guys exposed to coal? Specifically the Newcastle coal. Now that I don't know. I was trying to research that in the morning to get an understanding of which coal-based companies or which mining companies are going to be impacted the most. And, here we are. I guess WHC was impacted at the end of the day, and IGO as well. So that one I'm going to have to look back at and study a little bit further. This is just like a video journal of the trades. I haven't gone through the actual analysis of what went wrong specifically on this one, but that's definitely something I'm going to have to look into to understand better, because that is, that's a sick move, for IGO. You just look at the daily range, that is massive. And in order for me to catch this in the future, I need to understand what happened and why a little bit better. So that's pretty much it, guys. If you learnt anything, please do consider hitting that sub button. I'd appreciate that a lot. Otherwise, the like button will do just as well. And I'll catch you guys next time.